Welcome to the SpreadX trading update. We're looking ahead at Sainsbury's quarter 1 figures coming out on Wednesday.
Yeah, obviously, Sainsbury's one of the sort of bigger news stories this year. Their sort of fairly shocking merger with Asda. You know, that's the kind of sort of sector transforming deal that obviously is going to have a lot of scrutiny from the CMA and from the government, both that haven't exactly announced whether the deal will go ahead yet. I think there was sort of a fairly testy meeting with, I think it was the Food and Affairs Committee, where the CEOs of Asda and Sainsbury's both sort of got a bit of a roasting over the way they dealt with the merger. Obviously, you had the clip of the Mike Coupe, the CEO for Sainsbury's, singing "We're in the Money," accidentally caught on camera. That wasn't great for the deal, and I think doesn't paint the deal in a very good light in the eyes of the government, especially since it could cost a lot of jobs. Yeah. And seriously reduce the competition in the country in terms of the supermarket sector. In terms of Sainsbury's wider performance, it's doing fairly well. Its full year figures were back in April. I think group sales were up 9% to, I think, something like £31.7 billion. Like for like, it's up a decent 1.3%. That's nothing spectacular, but it's fairly solid in what is a tricky sector. I think underlying pre-tax profit was up 1.4% to 589 million. The bulk of that growth coming in the second half of the year, where I think it was up 11%. So obviously it gained momentum in the second half of the year. In terms of its first quarter figures on Wednesday, they're not expected to be particularly exciting. I think like-for-like sales are going to be down 0.1%. And that sort of follows on from a report from Kantar World Panel last week, I think it was, that said that for the 12 weeks to, I think it was the 17th of June, Sainsbury's was the only supermarket to see its sales slide, which, good on one hand, as the sales were on the up, but not great for Sainsbury's to be sort of the one black mark in a sector that seems to be picking up steam after a fairly tough 18 months. In terms of what our clients are doing, they're actually selling at the 320 mark. So, you know, obviously, after the announcement of the Asda deal, Sainsbury's has shot up and broadly held around 310, 320 in the last month or so. Investors are sort of selling at those levels. So I guess maybe due to a mixture of both, you know, the fact that the sales figures from Kantar World Panel and the fact that like-for-likes are meant to be down this Wednesday, but also perhaps a certain element of scepticism or concern about the deal actually eventually going through. There's still a while before the deal is confirmed. I imagine there are going to be a lot of obstacles in the way of the deal going through, and I think that's perhaps a slight air of caution from our clients in regards to that, hence why they're selling at the 320 level.
Interesting. Okay, thank you, Connor.